Thanks very much for joining us here. This is a topic that 15, 20 years ago would have been relatively difficult to do, frankly, because currency 15, 20 years ago meant just that, currency. You had money, you spent money, you saved money, occasionally you transferred money, but for the most part, it was like the air that we breathe. Fast forward to the here and the now, there are a lot of changes, obviously. There's crypto, there's blockchain, there's digital apps that redefine what currency is, there's digital currency, all these things moving at a breakneck pace that will affect everybody in this room in the months and years ahead. I'm Cody Combs, Future Editor for The National, and just a point of clarification, my title, Future Editor, does not mean that I will someday be editor. I am the editor on the Future Beat, which is at the intersection of technology and societal trends, which is the perfect thing for this topic, the future of currency, because as I've already said, it will affect everybody in this room in one way or another. So it's great to be here at the Future Forum at the Museum of the Future to talk about this. Here to extrapolate on the future of currency, where we've been and where we're going, we've got three amazing thought leaders, entrepreneurs, just really interesting people here. I'm going to start by introducing you, Yasser Abu-Shabban, founder and CEO of Silver Peak Capital Advisors. He'll be helping us look at the traditional rules of currency, kind of connecting the past to the present and the future. Sarah Byrd, CEO of Time Banking UK. I'm not going to do this justice, but the idea of time banking and the story behind it's quite interesting. It's a way of exchanging skills without money changing hands, which totally, in my opinion, kind of flips the idea of currency on its head. And we're also joined by Stefan Rust. You might have seen him on various media outlets, on TV, CNBC, just to name a few. He's the founder of Trueflation, an economic data aggregator serving independent, unbiased, real-time data on-chain and off-chain. Now, I want to start with doing something that some might consider just a little bit banal, but I think kind of gets us from point A to point B. And that's, how do we define currency? So you just do the basics. You ask Merriam-Webster dictionary, how do we define currency? According to Merriam-Webster, the definition of currency is as follows. Something such as coins, treasury notes, and banknotes that is in circulation as a medium of exchange. A common article for bartering is something that is of general use, acceptance, or prevalence. And go down the line here. Let's start with you, Yasser. Agree, disagree? Is that still applicable this day and age? What say you?
Well, I think it's probably a little bit limited if you look at where we are today. I mean, historically, the way I learned it when I first took economics over 30 years ago, it's a medium of exchange, unit of measure, and store of value. That's really the currency. And that's what makes a currency prevalent, is that these things that I mentioned, unit of exchange, store of value, and medium of exchange, store of value, unit of measure, are also stable in their use and their application. So, an entire system has been built based on that. I think we are seeing that, the foundations of this system is coming under revision, let's say, not necessarily attack, but, I think, just looking at the economic definition, I would probably expand on that a little bit, and especially today.
Sarah.
Yeah, and I'll probably talk a little bit more about my thoughts on this, but I think that's largely true definition currently as it stands, but I think all of these other digital and alternative currencies need to be taken into consideration. As you say, something I'm involved in is nothing that you can actually touch. This is all around time exchange.
And Stefan?
Yeah, I mean, I think the definition is an accurate reflection, right? A unit of exchange. It needs to be measurable, and it needs to store value. And I think why I got into this space is the store value element, right? We saw a lot of debasing of fiat currencies due to money printer go burr. And so as a result, there's been debasing in the sort of fiat traditional world, and that's led to the rise of cryptocurrencies, specifically Bitcoin, that has a very limited supply, which actually provides you the store of value. However, the medium of exchange has to be better than it is today with the dollars, and we don't yet have that type of liquidity in the market for any sort of new currency. A lot of what we're doing is experimenting and trying to grow that. And then ultimately, transaction speeds, right? How do we get fast execution of transactions? And I think those are elements that hopefully we'll be talking a bit more about here today.
Absolutely. And where do currencies generally get their value? I know you and I have spoken a little bit. You can speak more to the traditional sense of this. Where do they traditionally get their value?
I mean, historically, if you look throughout human history, since the dawn of civilization, effectively the initial medium or means of exchange was through barter, where if I had a good or a service and you needed that good or service, then we could exchange our goods and services. That was a bit limiting, obviously, because you had to have what's called the double coincidence of want, that I need what you have what I need and I have what you need. So the evolution was from going from that to agreeing on a commodity that can be uniformly developed, that has certain features that we agree that are valuable, that are rare, and we can use that as a way of exchanging. So the rise of gold, the rise of silver, even shells, seashells in some civilizations, some communities, but something that we agree that has value. That was a commodity-based system. We then went from instead of carrying this bulky thing with us, whether it's gold or silver, can we create a commodity-based certificate or a standardized piece of paper that is backed by a commodity? And that was when we moved to currency that is not exactly fiat, but it was paper that was based on the value of a true commodity. So the gold standard was an example of that. And then we finally moved to fiat currency all the way, where it's just based on the faith and credit of the issuing government. And I think that created a financial system globally, especially after after 1971, after the breaking away from Bretton Woods, where there was there was a few global centers, whether financial centers or economic hubs, that had that weight of mainly in Europe and in the United States, the economic weight to create that feeling of faith and credit and the economic might to back the currency that they produce. And those currencies became the main currencies globally. It used to be the British pound in the 19th century into the earliest 20th century. Then there was a shift to the dollar because the United States was the predominant economic power. And that's the system that effectively created that value. It wasn't a value based on nothing necessarily anything tangible, but general economic weight, general political and economic power, and the faith and credit in the issuing nations. And I think that's, to some extent, we'll get into that later, we'll get into this discussion, where those elements are coming under, as I said, revision, they're changing, and there's an opening up of the system where it's not just a few countries or a few economic hubs that are controlling or are considered to be the reference globally.
And a lot of times when we cover these big topics, it gets diluted, and we were speaking a little bit before this session about how digital and crypto often get false equivalency. They get lumped together. Can you kind of talk about the differences for the lay people out there that might be misunderstanding?
Yeah, sure. And I wouldn't necessarily, when it comes to crypto and blockchain, I wouldn't say that I'm the expert on it. I mean, I'm among the lay people. But, and I think we have people on this panel that are far more experienced in that area. But, to me, we've had digital currencies for a long time. I mean, every time you tap a credit card or you tap your phone, or even before we even had the NFC type of technology, swiping a magnetic strip on a credit card, that was a form of digital currency. Transferring money via wire transfers, that's a form of digital currency. I mean, I'm old enough to remember, just barely old enough to remember, when you had to use this kind of physical mechanism to swipe a credit card, and you get a triple, you get a carbon copy in triplicate, and you take one and they send one to your bank and the merchant keeps one. And that's kind of an analog currency, I mean, so in a way. But now we move to fully digitizing those transactions. So digital currencies have existed for a long time. I just want to make a distinction between blockchain, crypto, and digital.
Stefan, I think you want to jump in at all? Or?
Yeah, no, I mean, I think there's digital currencies, which is just the digitization of putting the piece of paper, the $10 value, into ones and zeros, so codifying it basically. Whereas cryptocurrencies are encrypted, and there are, and ultimately is a whole new form of money, where it's managed by a decentralized, not a central bank, but by a decentralized network of nodes that confirm a deduction from one person's address to the addition to another person's address. And that is now fully encrypted and secure over a network of multiple different participants. And there are some advantages to this, right? And one is money as such, cash. I give you money today. It's like there's an immediate transition, there's an immediate execution, and there's an immediate exchange of value at that point in time. A credit card actually is the best form of payment today. Why? Because you can wait 30 days. If you're a consumer, that is, sorry. You can wait 30 days to settle. You can complain, and you can cancel that transaction within those 30 days. And as a merchant, though, it's really bad. You have to pay a 5% fee. I have to pay a 5% fee, not on the ratchet anymore. I pay it on a point of sale digital version of that ratchet that you had in the old days. Number one, so I pay a fee on that to have that software and to have that tool in my store. And then I have to wait 30 days. And then, of course, the credit card, the bank, the credit card company, they all want a piece of the pie. So I pay 5% roughly on average, maybe a bit more, maybe a bit less, for that transaction, which means the consumer has to pay that, of course, because I'm not going to take that out of my P&L. It's going to come from the consumer. So that drives, again, a bit of inflation. And at the same time, I have to wait 30 days. And in the days of e-commerce, a lot of transactions were being canceled with the credit card because you had 30 days, especially if you were in maybe not such politically correct businesses, where the fees are actually even way more. They go up into 10, 15%. And a lot of people then canceled the transactions. And so it became very difficult in e-commerce to then execute on transactions. And so that sort of rose to one of the ideas as to how to do that on a network level and create a unique currency, where today there's an immediate exchange of value and it's immutable. You cannot go back and cancel a transaction once it's happened in the blockchain world and in cryptocurrencies. And it's secure and it's confirmed by multiple different ledgers that maintain the database of how much money you have and how you have spent that money, which is, by the way, fully transparent on the blockchain for anybody to see, which is another concern, right? It's too transparent, and ultimately, in the centralized world, we don't have that necessary transparency like we do in the cryptocurrency world.
And Sarah, this day and age, crypto seems to suck all the air out of the room in terms of media attention. You're the CEO of Time Banking. Tell us a little bit about what that is. What does that mean exactly, the genesis behind the company?
Okay, so time banking is basically a different type of currency. So the currency is time, where everyone's time is equal. And this is about supporting the core economy that we have. So individuals, families, communities, and this is where we value every single person in society, even though they may not feel that they have a value at that point of time in their lives. So time is the currency, so everyone's hour. So I'll give you an example. So if I was to visit somebody in my neighborhood that lives alone and spend 2 hours with them, I would earn myself 2 time banking hours or 2 time credits, in which I could then spend within that network. So it could be that I ask someone for help myself in my home or my garden, or it could be that someone speaks a different language, or that somebody can play a musical instrument, and they can teach me that for 2 hours, and that's how I would spend my 2 hours. I think because the equality of these hours, there's no value that's being placed on what people are giving and receiving, so it's not bartering. Everyone's hour is equal no matter what, and I think the great thing about time banking is that you can spend as much time as you like with someone, and you earn more if you like. So for example, the kinds of activities, the most popular activities that people will swap with one another in their homes and gardens, befriending, certainly helping with gardening and shopping and pet care. And also we encourage people to have a look at themselves. What are your interests? What are your abilities? Can you do something that you could share with another person? And I think the beauty of time banking is that we can help those people no matter what their age, ability, background. It is totally inclusive and it's person-centered, so that people will define themselves what they want to give and receive under that time banking framework.
In which countries is it available, and does that present a problem implementing it in different countries?
So obviously in the UK, we oversee, we're the national voice of time banking in the UK. So historically, this started in Japan, so where young people would help their elders, and they would save, if you like, that time, almost as a pension, so that one day when they needed help themselves, they could actually gather that help without the need for money. And at this moment in time, we've got over 32 countries that are using time banking as that mechanism of currency. We have supported other countries in developing this, so we talk to them about things to avoid, how to make the best success of your time banking networks. So India, for example, have got a huge network of young people that are doing this time banking and banking all their hours, up to 1 million hours that they are currently heading towards. South Korea, I've given talks in, and we've helped China, who have got their government backing, and they've got a huge network of time banking there. Most recently here, Qatar and the Kingdom of Saudi Arabia have come to us to ask if they could actually implement time banking in their very new, the Line, their new city that they're creating there. And I think just to add here that we have got a digital platform that we use to store all the data. So we've got countries like Canada that use our platform, but very often the different countries have got their own platforms that they create, that they use, that they can store the data, personal demographics of people that are getting involved, the types of activities that are being exchanged, and the numbers of hours that are actually being earned and given.
And what do you say to skeptics or people who might be misunderstanding it that say, well, that sounds a lot like volunteering. I've been volunteering my whole life. Yeah, so we kind of see that very often people, so our evidence shows that the people that take part in a time bank, doing time exchanges, do not see themselves as traditional volunteers. It's very much less formal. It's about doing things that you enjoy doing when you want to do it. Sometimes it's referred to as micro-volunteering. Volunteering is more of a kind of a one-way street. You volunteer your time for an organization or a thing. This is more about reciprocity. This is the giving and receiving. It doesn't work unless you've got giving and receiving happening within a time banking framework. And it's also not a professional service. I think it's really important that we manage the expectations of people in local communities to say that these are people helping people. If someone asks you to help them in your street or in your neighborhood, you do it to the best of your ability. If you want a professional service, we would say that you might need to pay for that with standard currency. People helping people do so to the best of their ability. And Stefan, I want to pivot for a moment. Go back to Truflation. On Truflation's website, it says, quote, verifiable truth is in short supply. You mentioned a little bit earlier, and I don't want to misunderstand it, but you said something to the effect that crypto might be a little bit too transparent, but to some people it might be the opposite. It's just glass half full, glass half empty. How do we get verifiable truth in the age of cryptocurrencies where everything seems, superficially at least to some extent, to take place inside a black box?
Well, I don't know what the question right there is, but I mean, if I look today, I mean, we aggregate over, every single day we got hundreds of millions of data points that come in that we aggregate, and then we compose that data. We then actually calculate associated with that data, and we write the calculations onto the blockchain, so it's immediately verifiable. You can trace back the source of data that we have aggregated. All of this is visible in what we call an explorer. An explorer is like your browser on a computer, on the internet, and every transaction on a blockchain, on a public blockchain, is transparent and visible. You can follow and trace every little transaction back to the source, to an address. You don't necessarily know whose address that is, but over time you can sort of guesstimate to pretty accurate, sort of very accurately, you can guesstimate whose address that is. And today I'd argue, particularly on the blockchain, on Bitcoin, on Ethereum, on Solana, all of those addresses are pretty much identified, so you'll then be able to trace that back. And if our project, if you want to go check out data, we have those contracts available so that anybody can go and track, this is Truflation's contract, and you can then see all the data that we've aggregated. And anybody wanting to work with that data can immediately interact with that data as well.
So the elephant in the room, and it can't be avoided, FTX, Sam Bankman-Fried, most recently the US clamping down on Binance. Doesn't that validate a lot of the concerns that so many people have?
So bear in mind, those were centralized exchanges managed by legal, regulated, licensed entities. All the employees at those companies were equally licensed financial experts and executives. And so what that means to me is it just highlights centralization of power corrupts, and full stop. And so how do you put safeguards in place in centralization of power? And that's what we've been doing in our world all the time. I mean, we always have checks and balances. We always like to see checks and balances, and particularly in sort of more emerging markets, you have those checks and balances using more modern tools available. Whereas in more industrialized or established markets, they've grown up through legacy and have to reinvest to leverage these new systems. And there's always a resistance because of the incumbent, legacy processes that have been put in place need to get changed, and everybody needs to be taken account for in that process of change so that you have a good change. But there's lots of learnings. How do we leverage those learnings and drive change faster, right? And I think you're seeing that in market. I mean, look at the UAE and look at Dubai here. It's like constantly evolving, leveraging very modern tools to try and automate and simplify the future for us. And how do we do that in the rest of the markets?
And I think the big selling point is, you touched on it a little bit, that it's decentralized. Ideally, it's decentralized. But because it is so dependent on technology servers, is it still decentralized if it's so dependent on that sort of thing?
So centralized entity, the advantage that like a Binance or a FTX had, or others they're like, were that they made it easier for the user. You didn't need to keep your own keys on every single blockchain. You didn't need to manage your own wallets. So you had no responsibility. You didn't need to make sure you learnt a new platform. They would take care of all of that for you, and then they would aggregate that in front of you and then put a nice interface with a centralized database so that you could interact with all of those different blockchains, different technologies without having to know the underlying solution. The decentralized world, the whole goal is how do we make it as simple as that experience for users in a decentralized world? That's coming. And that's what everybody is building and has been working on. It may not come overnight, but it will come. And, I think the biggest thing is, you look, both companies were startups. They had no recognition, especially Binance when they launched, I think 2012 or 2013, maybe a bit later, I can't remember exactly, but nobody knew what Bitcoin was. Nobody talked about Bitcoin. It was a very limited circle of people that actually appreciated the value. And your question earlier was, what is the value? Why do people value this, right? It's purely one thing. Dollar is the same thing. Any other currency is trust. And you mentioned it, Yasser, right? I mean, it's trust. Do I trust the US dollar? We've learned over years and years and years, hundreds of years, maybe not quite hundreds, but 100 or maybe close to. We've learned to trust the US dollar. It used to be backed by gold, and then it became backed by a piece of paper, right? There's nothing backing it other than the US government saying, we'll back it. And so you trust the US government to back it. And there was a small community of people that trusted Bitcoin as a means of exchange. And they trusted the value that was presented to them. This Bitcoin is now worth $37,000 today, but at the time it was worth $5. It was worth 10 cents when it first started. The first people I met in Bitcoin, they bought it at 10, 12 cents when nobody respected it, and you were laughed at and poo-pooed out of a room. And so all of a sudden it's grown to something. And so any startup working in that environment is going to have to struggle and have to grow. It's painful, it's hard, and I think Binance did grow through that. FTX, I'd say, pushed the limit way beyond ever being able to come back, and I think that's a very different sign. of the different types of businesses.
And you touched on the dollar a little bit. I'm going to bring in Yasser, kind of reflect on the evolution here, and it's not the be-all, end-all anymore. What does that mean going forward for fiat currencies?
Right, yeah, I mean, it's an interesting evolution because regardless of what's happening in the blockchain or crypto world, the dollar as a core reference currency or reserve currency that role is not secure anymore. And maybe if we can go back to the earlier conversation on how do you define the value of a currency? And what I mentioned was that commodities were usually what defined that value. If you're a commodity-based currency, for a long time we lived based on that system, whether you're actually trading, you're using the actual commodity as the currency, or you're backing your currency with that commodity. And I think as the world becomes more decentralized, and not just in the sense of decentralizing currencies, but the whole financial and economic system is becoming more democratic, or becoming less centralized with the traditional hubs of economic power, whether those in Europe or in North America. The disbursement of this power, economic-wise, to more emerging markets, to globally, has created this realization that, to use an example, if I am Brazil and I'm selling iron ore and to India and I'm buying rice from them, or even some technological services, why do I need to price everything in dollars, convert my currency into dollar, send that over from Brazil to India, and then buy the rice, and vice versa? I have to convert rupees into dollars, send that to Brazil to buy the iron ore. Why can't I just, where's the true value? The true value of that transaction is in the commodity that's being exchanged. So in a way, we're kind of going back to the future in a certain way. We're basing the value of the transactions, the value of the commerce, on the underlying commodities, the underlying services and commodities that are being exchanged. And as a result, the dollar is becoming a bit more marginalized. Maybe I'll reference it as a currency, but I don't have to actually transact in dollars. I can transact in my own currencies, or I can barter. And as a result, that's creating this decentralized, more democratized world. And there is a bit of a convergence there between this kind of approach with having more crypto or blockchain or other means of exchange. So I think that trend was already happening. I mean, we saw that with BRICS thinking of creating their own currency, but it's becoming more prevalent with even having non-kind of fiat currency, non-traditional currency ways of exchanging. So I think the idea is that if you are in a system that is based on faith and credit, and with all the printing of money, with the ballooning debt and deficits in the United States and even in Europe as well, the faith is getting a bit shaken. The credit is not as good as it used to be. So in a time of declining faith and declining credit, you are looking for alternatives. And I think that's what we're seeing here, is that the role of the dollar specifically as this global reserve currency, while probably not under threat in the near term, is not going to be stable, in my view, longer term. Because we've seen this movie before. I mean, when the hub of economic power and geopolitical power was in the United Kingdom, the British pound was a global reserve currency. When that power eroded, I mean, European countries, and the pound still has an important role, but it no longer became the reserve currency, and we moved to the US dollar. And now we're going through a cycle where it's not that there's a new geopolitical and economic power that's rising up to replace the United States. It's actually a lot more dispersed than that across a number of global players. And that's why I think it's shaking up the system at its core, where there isn't a single kind of reference or reserve currency, that it is becoming more decentralized, if you will.
But I would argue that that's the brilliant opening for cryptocurrencies. I'm biased, but I would argue that that's the brilliant opening, because it's not only the US dollar. I mean, the UK, the British pound, I mean, the UK government equally is suffering debt. You've got Europe is equally suffering on the same issue. Every single Western nation is suffering of that same problem. And then ultimately, China is equally suffering that. Japan, equally. So every single nation has over-leveraged, thanks to these central banks, their positions and are unable to manage a balance sheet appropriately. We all, individually, as a household manager, have to manage our own income and our own spendings. And none of these governments have seemed to be able to hold to that. And we have not held them accountable to that. Experiments like using time as value, creating a currency with time, creating a currency out of digital assets, using commodities again as the foundation for currencies. You could actually even tokenize a lot of these commodities. And then ultimately that token is tied to oil. That token is tied to nickel, palladium, whatever we need in the future. And so that's really exciting. And that's why I think, where is the future going to go with all of these different experiments?
And Sarah, on the issue of technology, there might be some skeptics out there that say, well, I'm going to accumulate all these hours time banking. How do I know the company's still going to be around X amount of years from now? What if I go there, the server's gone, the data's gone, this is all for naught?
Yeah, I think the sustainability and the kind of the buy-in for the idea of exchanging time rather than currency has to be proven to be a success so that people can actually feel it's credible. But just going back to a point that's been made about, the UK government lack of money, I think this is one of the reasons why we have the support from our central government, the support from our National Health Service, because money is lacking, because the population is ever growing, because the aging population is happening. They are looking towards time, they're looking towards us as an alternative solution to the problem. So this is encouraging the voices of people in communities to come together, to take control of their own lives, to realize their own value, to help one another, push the currency to one side for a moment, all of these issues that are happening. So as the national organisation, what we do is we provide all the resources that communities and organisations might need that want to explore this currency of time. We want to explain to them that there needs to be governance. There needs to be somebody accountable if something was to go wrong. What would happen in a community if somebody were to exchange time and something was to go wrong? So we have all those resources. We've been in existence since 2002. Time banking in the UK has been here since 1998, when our predecessor learnt about the great things happening in America. They call that time dollars. He brought time banking over to our country, and since then the learning has been incredible. So it started out just to be faith and trust in other human beings in your community. Now we have to have some structures in place. There needs to be things like insurance. So we have brokered good relationships with insurance companies in the UK that will actually ensure a time banking network. So you're talking about people helping other people, doing pretty much anything, as long as it's not a professional service. And if something goes wrong, I have to tell you that actually pretty much nothing goes wrong. That the biggest problems within time banking are personality clashes that somebody has to kind of deal with. But and why doesn't anything go wrong? Because people are living in the same block of flats. They're living in the same neighborhood. They're living on the same estate. And time banking happens best when it works in a hyper-local situation where people can walk to each other's homes and gardens. And we found that the people that get involved are those that might be short of hard cash. They might be those that are unemployed, which is why we've been talking to central government who now go, okay, we've got loads of people unemployed, we've got loads of people that are on benefits. What if they were to do time banking and increase their self-esteem and self-confidence because they realise their value? Then maybe that's going to be the first step towards paid work. Let's support time banking in this country and make some of these changes happen. But I think sustainability-wise, so the first time banks in 1998 are still going strong now. The first one was started by a doctor in the UK who realised that I need to have a time bank within my doctor's surgery because people are coming in and they're taking up all my time. Why are they taking up all my time? They don't need pills. They don't need medication. They need other people. They need connections. They need friendships. They need relationships. Let's do this, what we now call social prescribing. Let's do time banking. Let's have people coming in and I can refer them to someone else that can help them. It doesn't need to be a professional. It doesn't need to be the NHS service. It just needs to be other people. Let's show people what value they have got rather than what they haven't. And I think since the pandemic, we've had some national charities come to us to say, lots of people had come to us to older people, we need help, we need help, we need help. Can we do time banking? Well, why? Because we want older people to see their value, not what they haven't got, but what they have got, that they can help other people. They can become more confident. They can make decisions for themselves. They don't have to be dependent on all of this help coming in. And I think for long-term sustainability, there still needs to be, dare I say it, somebody governing each local time banking network. And very often our survey has shown in the UK, 90% of local time banks do have someone in a paid capacity that are helping those activities happen safely. So there's safeguarding always in place. There is minimizing risk to make sure nothing goes wrong. And I think so getting those funds to have that, those core 2 or 3 people even, that can be managing thousands of local exchanges need to be funded. So, which is why we're looking for national sponsorship, etc., so that enable that to happen.
And speaking of time, the perfect segue, we are almost out of time, but I'm going to ask something I ask all my panels just real fast, kind of bring it full circle. I'll start with you, Stefan. What is the future of currency? Is there something that we're not asking, we in the media, that people need to know?
Yeah, I mean, that's a huge question. The future of currency, I've pretty much said it in my previous statement. I really think that we're going to see a significant change in how we value commodities. Commodities on this planet, at least on this planet, are finite, or is finite. And as a result, that is the value that we need in the real physical world to stay strong, healthy, fit, eat, live, right? And have a roof over our heads. Those are all things that we need. So the commodities, how do we give the commodities the appropriate value? That's what's going to drive about a sustainable environment. That's what's going to drive about appropriate value to each of the commodities, and time equally is a commodity. And I think cryptocurrencies and tokenizing everything is the way to go.
And Yasser.
Yeah, I mean, I would agree to some extent that we are moving away from a system that is based on faith and credit to something that is based on something more intrinsic in value. And so we're coming maybe full circle to how currency or mediums of exchange were viewed hundreds of years ago, that they had to be backed by something. And as we see the traditional currencies, the traditional global reserve currencies, weakening their position because of the perception or reality that the countries that are issuing these currencies are declining credit, the faith in their ability to manage their own balance sheets is declining or is shaken. What is the alternative? And the alternative is then to look at what in the conventional, traditional world, to look at the currencies of countries that do have commodities and do have a strong balance sheet backing them, because ultimately, whether you talk about sustainability, the transition to renewable energy, all of the climate change and movement, initially that's going to require a huge investment coming from huge investment that will require buying a lot of commodities, putting a lot of commodities to work, whether it's iron, whether it's other energy sources. So as a result, countries that have that strong balance sheet, that have the ability to produce those commodities and sell them into the world, I think those are going to be viewed more favorably and their currencies will be viewed more favorably versus just a system that is based on faith and credit of the larger economic powers.
And Sarah?
Just really briefly, I guess to say is that, let's hope that we'll all have time and that things are not going to run out for us before they should do. So I would just say, use your time wisely, share it with another person, let someone else share their time with you, and let's strengthen our communities through time banking.
Thanks very much to this wonderful, wonderful panel for enriching this discussion at the Dubai Future Forum. These are all issues that we talk about all the time at thenationalnews.com. Feel free to check out our website. This currency issue is not going away anytime soon. We're going full steam ahead, and we're going to be having a lot of articles, a lot of content along those lines. Feel free to check us out. And I want to personally thank the Dubai Future Forum for this wonderful opportunity and, of course, you, the audience. So thank you so much.